Hey, this is Dan Nathan. You're listening to the podcast version of Trading Spaces. It's a live Q&A that I do with my on-the-tape co-host, Guy Adami, every Monday and Wednesday at 1 p.m. Eastern on Twitter Spaces. All right, it's the top of the hour. This is Trading Spaces. I'm Dan Nathan. That was Guy Adami. He finally rejoined us.
Still here.
We're still here. We do this every Monday and Wednesday. Today is Wednesday. We do it at 1 o'clock Eastern. We talk markets. We take your questions. We're going to be really formal with this thing. We're going to goof around a little bit. I mean, Guy, you obviously can't afford this, but we just started putting this in our on-the-tape podcast feed in your favorite podcast store.
Sure.
So subscribe to that. This is hosted and sponsored by CME Group. They are the sponsor of our podcast On the Tape. We had a great episode, Guy, that dropped on Friday. You were involved in one of the portions with Stacey Cunningham, the president of the NYSE. We covered tons of great stuff, her history on the exchange, becoming president, starting as an intern, and regulation and meme stock trading and all this other stuff is great. And then Danny and I, you probably didn't listen to it because you don't listen to our podcast, Guy.
No.
But Danny and I did the front portion of that thing, and we kind of went at it a little bit. I think it
with
was
each other? You guys got into it with
a little bit. So everyone check that out. This week we have a great episode. We already titled it. It's WTF is the Metaverse. We had Packy McCormick and Not Boring. We had Jared Dicker, the Churning Group, and we had Melton Demers of CoinShares, and we're just talking about the Metaverse, and we're really thinking about it in a way that maybe boomers like Guy and I can't figure it out, but they helped us think about it. So that's going to drop Friday morning. All right, Guy, let's talk markets in about, an hour. We're going to get the Federal Reserve. This is an institution that you bow at the altar of. I mean, what else do you do?
Listen, thank God that they created the Federal Reserve when they did. Right. I don't know where we'd be without them. I know you say that in jest, and obviously 99% of the people here know that was you poking fun at me. But I will say this now for the 101st time. Of the many villains of the 21st century, and there will be many, at the top of that list will be central bankers, specifically these geniuses at our Federal Reserve. Now, look, I don't want to have this conversation because you don't want to have it, but what I will say is this. You can't do the counterfactual, so I don't want to try, but in my opinion, we'd be so much better off if they had just gotten out of the way many years ago like they should have. But here we are. And we are become slave to every move they make, every word they say, and that is problematic.
Who is slave to it? Markets are at all-time high. Housing prices are at all-time high.
Yeah.
Crypto's at all-time high.
And if that's their mandate, then they've done a tremendous. If their mandate is to make the wealthy wealthier, then they've done an amazing job. If their mandate is to create a chasm that's never been wider in terms of the wealth gap in this country, then they've done an amazing job. I don't think either of those are their mandates.
No, I agree with that. But when you think about this guy, I mean, one of the reasons or two of the reasons in the financial crisis, and then again in the throes of this pandemic, I mean, they dropped interest rates to zero. They started quantitative easing, both instances. They've obviously expanded the balance sheet, tremendously. I mean, we don't have to have that conversation, but here's the thing that happened in 2020. We didn't have credit markets seize up. We didn't, have a prolonged recession. And I understand the whole Darwinism, sort of aspects of it. But, and again, you can't prove a counterfactual, but we didn't have a credit crisis. And a lot of people, while they're still underemployed relative to, let's say, pre-pandemic, listen, I'm as surprised as you, Guy. I thought the scar tissue on our economy would be very evident at this pace. But think about where we are with inflation expectations and all these bottlenecks with supply chains and pricings of goods and services. And you know what? We're okay. You know what I mean? We're coming out of the other side of it a little bit. Don't you think?
Yeah.
You agree with that a little bit?
Listen, in terms of markets, yes, we're fine. I mean,
I don't even mean markets.
But markets have a way. I mean, that's the ultimate judge and juror is the S&P 500 to a certain extent, and the NASDAQ to a certain extent. I mean, that's what everybody looks at. So a lot of people will say, hey, look, markets at all-time highs, things must be great. And I don't think nothing could be further from the truth. We've been just masking over problems that have been around for the last 12 or 13 years. And, we like to think of ourselves as this great capitalist society, which is complete horse hockey, as they say, because what we've done here, and I've said this for years, Dan, and you know this, we capitalize gains and we socialize losses, and that is anything but capitalism.
No, I listen, I get it. I think that
I know you get it. I'm not here
that
to
word needs to
debate you.
be
I mean, it's all
redefined.
good. You
All
want to
right,
know what sticks out to me, by the way, amongst there
yeah,
are a lot of things that stick out to me. I just read something about the Chinese ramping up their nuclear ambitions. Not that they have ambitions. I mean, they're fully ensconced. But look at some of these uranium stocks. Specifically, look at the move in CCJ over the last 6 to 9 months. One of the things we don't talk about nearly enough, and we probably should start, is what's going on in uranium. Anyway, that I just happened to take a look at that, which is why I wanted to leave with it. But there are a lot of other things happening as well today.
yeah. Brian Kelly, our friend on Fast Money, he often mentions uranium stocks. I don't even know how to spell it or where it goes in a reactor, but not my jam here. All right, guy, let's talk about this. We're like an hour away from the Fed telling us that they're going to start to taper. They buy $40 billion of mortgage-backed securities. They buy $80 billion of treasuries. This is combined a month. They've been doing this for months and months and months and months since the start of the pandemic. So they're going to announce a taper. What does that mean? They're going to buy less
Going to
bonds
buy
per
less.
month. Buy less. Okay, but here's the guy. So I tweeted this yesterday. Maybe Amanda can find this tweet because she is Johnny on the spot with the tweets. I went back and looked on your birthday in 2013, guy, in December 18th. You were what, 68 back
Yep.
then? Okay. The Fed started to taper their quantitative easing. I think they were buying like 80 billion in bonds back then. This is like 4 years after the financial crisis, right? They were just coming off of this, this kind of like heavy quantitative easing, one, two, Q. Remember all those things, and they started to taper. The market was up about 22% in mid December. It closed up 27%. It raged. And the quote in the article from CNBC, because I Googled it, was like the Fed starts to taper bond purchases and markets close at all-time highs, which I
Yeah.
thought was pretty fascinating. If you look at these charts, they are identical this year versus that year. I don't think there was a 10% drawdown in 2013. There was a bunch of like 5% drawdowns back to the uptrend, and then they would bounce off, and within a month or two, be making new highs. Pretty interesting setup, don't you think?
Yeah, I think you're exactly right, and well done with your research, and you used your Google machine extraordinarily well. I think the problem, I think the reason why people are concerned, by the way, I don't think the taper to me is not a big deal in terms of what it's going to do to the market. I think what people mistake, and maybe I'm one of those people, I don't think so, is back in 2018, not only did Jerome Powell come out of nowhere and say, hey, by the way, we're reducing our balance sheet, and he also said they were going to start to raise interest rates. And I think that double whammy, seemingly out of nowhere, I think scared the market. And I think that fear or those scars are still with the market participants now. I think that they're somehow trying to equate what happened then with what's potentially going to happen now. I don't think that's what's going on. I mean, we say it all the time, but taper is not the same as a rate hike.
Yeah, well, let me ask you this, guy. Why is the 10-year yield, and I know that the 210 spread is flattened a bit here, so you have the 2-year at like 0.48 and you have the 10-year at 1.56. Why is the 10-year still below where it was in March, when it was like kind of all systems go, if you will, as far as the economy? I don't
Yeah,
think
that's a
people were
good
really
question.
pricing in Delta.
I wish I could answer it intelligently. I can't. Obviously, you mentioned the fact that the 2s10s has been narrowing, which I guess in some ways that might actually be worse than just 10-year yields going higher. I don't know. I'm not an economist. I say it all the time. I'm not smart enough to be or humorless enough to be. But I'll still say this as we're into November. I still think there's a chance we see 2% by the end of the year, and I'm going to stand by that. And we'll see what these geniuses say in 45 minutes or thereabouts. I don't necessarily think that's going to be the catalyst, but a lot of the numbers that have been coming out, regardless of what people want to say to the contrary, have been very hot in terms of inflationary pressures. And again, what's your definition of transitory? I guess is what it comes down to in terms of where they are in the cycle. They being the Federal Reserve. Did I lose you? Dan must have gotten
No, I'm back.
a call.
I think I don't think the transitory thing really matters anymore. I think at this point, when you think about where, so we had expectations for Q3 GDP that were 6-7% or something like that at the start of Q3. It ended up being what, 2%. That was basically the average of the pre-pandemic, 10 years of the pre-pandemic, right? And so now expectations for Q4 GDP, I think GDP now has it like 7, I don't know, maybe a little higher than 7%. I think the assumption would be that that is lower than expected, right? And so maybe it's some of these continued bottlenecks with supply chains or inflationary pressures or this and that, whatever. I mean, who knows, right? So all of a sudden, though, we're going to have a back half of 2021 where growth was much less than people expected during the first half of 21, right? And so maybe that kind of continues. I also saw a stat the other day that consumer like savings is back to pre-pandemic levels. So maybe we've eaten through a bunch of that kind of the goodies that a lot of people had on their balance sheet, unable to spend it and that sort of thing. And it seems like people are spending like crazy right now. I don't know. I feel like the growth thing. I know that maybe it's just reflective. Maybe yields are reflective of the fact that growth's not going to be as exciting as some people thought maybe 3 or 6 months ago, and maybe we do have a stagflationary environment, which I don't know. Sooner or later, that should hit stocks more than the taper, in my opinion.
What else is interesting to me is moving some of these banks obviously lower today is quasi interesting. I think again, the move in Citibank has just been remarkable in terms of how lousy it's performed. I mean, I think it's up marginally today, but I mean, Citibank since what I want to say, middle of August. I mean, the stock has been completely underperforming its peers, which is, I guess, interesting. Citibank below 70, that sticks out to me.
It's probably the only major U.S. bank guy that's below its 200-day moving average, which I think is really interesting. I mean, the stock, like you said, has gone nowhere. I do think Goldman Sachs broke out yesterday to a new all-time high. That thing's been consolidating, in this range. I mean, it actually had a nice little bump after its earnings, but I thought that was an interesting breakout. I also think the SoFi, we've been talking about that one. I own that one. And that thing was like a rocket ship from, I don't know, the mid-teens to 23 of late.
It's a big percentage-wise. It's been a huge move. You're 100% right. Very quietly. I think a lot of people got frustrated with it.
I started buying it at 17 and it went to 14 and now it's back at 23. Guy, what about these credit card, these processors that, like these things can't get out of their own way. I think that's pretty interesting. And I also think all of a sudden, dude, and you've been gone for a week, this PayPal acts like dog shit. I mean, like literal dog shit. I mean, that stock was trading above 260. I think it was close to 275 when that rumor came out that they were going to spend 40 or 45 billion dollars for Pinterest. It's lost a lot more than $40 billion in market cap.
No, and so I think what the market is saying is whether or not that was going to happen or not. I think to me, the market is saying, wait a second, what does PayPal need to do something like that? Are they concerned about their growth forecasts and where they are in terms of their maturity? And are they going to have to make a move where they basically overpay for some sort of growth engine, which I think is interesting. To your point about Visa, I mean, yeah, now it's getting a little worrisome because you're talking about levels we haven't seen, I think, since the spring of this year, having traded up to a 252. What was the all-time high in Visa over the summer? And now we're down around 208, which is a pretty significant move. You haven't seen a move. We've seen sell-offs in MasterCard and Visa, most significantly, obviously, in February of 2020 into March when it went, I think, from an all-time high of 210 down to 140. But this is pretty significant. This is the first one of this magnitude in a very long time. Now, you're still in a pretty significant uptrend, but I tell you what, and I think you would agree with this, you start to get a close below sort of this 205 level or so, and then things get a little dicey.
Yeah, I think that when you have prior market leaders and the market cap of those names like acting the way they do, you got to pay attention. Here's a couple other names. We just mentioned PayPal. PayPal and Square both report next week, and I think those are going to be really important when you think about growth and you think about valuations and how those stocks react. Because if Visa and MasterCard, which are trade much richer than many other sorts of names within like financials, however you want to define them, it's a kind of wide swath. The way that they have acted, I have to assume that has something to do with valuation, has something to do with some of these fintech startup or upstarts, in the competition. But if Square and PayPal, if we're going to see multiple compression there, I think that you can extrapolate that to like lots of other parts of the market. That's just my 2 cents. So I'm really actually very interested to see what sort of reaction they have to their forward guidance.
Yep. The other thing I think we just have to talk about briefly is the move in some of these retailers. I know you probably talked about it on Fast Money last night with Bed Bath and Beyond, but Macy's today again. Macy's, it's a huge move today, but this is on the back of what's been a very big move since the spring. I mean, this stock was, I think, a $7 stock, maybe even lower in the spring. It's a $30 stock today. It's not like Macy's has reinvented themselves, but all of a sudden, these retail stocks are trading like, it's back to mid 90s again. It's remarkable some of the moves we've seen. And it's not only Macy's, obviously, I mentioned Bed Bath and Beyond, but there's some other names as well. I just think that's worth just bringing up briefly.
No, Macy's was $7 a year ago. Now it's $30. I think one thing that you missed, Guy, while you were out the last few days is like meme stock mania is back, baby. And I don't know if you saw, GameStop at one point. So last night during Fast Money, we were talking about Avis, and I don't know. Did you see? Hey, Guy, you gonna stop ruffling your thing here? Whatever you're doing. We were talking about Avis, and the stock had
Sorry.
went from like, what are you doing? From like
I'm not doing
300.
anything. I'm
You
right
were
here.
definitely ruffling something. Somebody was.
All right.
300 to like 500 or something like that. Okay. Did you see that chart?
Yeah,
And then
I
we were
mean, we
talking
talked.
about it on air. And
I saw it because
well,
Carter
yeah, but
brought it up
guy, all
last
of a
week.
sudden AMC, that's right. But all of a sudden AMC and GameStop, as we're talking about it, start ticking up in the aftermarket because it's just like, I don't know. It's like meme stock fever. And I also think it's really interesting that Chegg yesterday, Chegg, okay, online like
Got cut in
education platform,
half.
got cut in half in one day. And I just think there's a lot of weird price action right now that, it's kind of like some shoot first, ask questions later. And then on the upside, these short squeezes, some of the stuff's crazy. And, today, here's Activision, new 52-week low, Guy, down 15%. Okay. And, this stock is now down 37% or so from its highs in February. How can we have just so much like discrepancy in individual names? Is there so little work that's being done on individual stocks that in one fell swoop that Snapchat could have been down 25% like that? You know what I mean? On
That's
one day
exactly
after
right.
the
That's
results.
exactly what's going on. And look at Zillow if you want to throw one more name in, because we had I forget his name, but during the Ira Sohn conference, I think it was last week, we had somebody come and pitch Zillow as a best idea.
Oof.
And I watched the stock go from like 88 to 93 during our show. I'm like, this is ridiculous. And now you saw what happened to it last night. But to your point, that's all it is. I mean, it's just people chasing momentum on whatever proprietary platform they use. That's exactly what's going on right now. And it is a few people doing a lot of people doing the least amount of work possible, trying to get as rich as they possibly can. And you and I both know how that ends. So we'll see if it continues to play out.
It definitely feels like there's a bunch of like late stage action going on here. And I mean, listen, it all makes sense when you think about where we are. We got finally, Guy, while you were gone, the Russell 2000 broke out, made a new all-time high, which I think is kind of interesting. And so, we finally had small caps confirming the multiple new highs in the major like large cap averages. But that's a pretty impressive breakout here. So, I mean, if you're looking at the IWM, I mean, what's the level? It's like 234 or
Well,
something like
that's the
that.
other thing I was going to mention. The breakout in the Russell today, the IWM is at a new all-time high, and that's the one that has not basically verified or validated any of the moves in the other broader markets. That's breaking out, and I wish I could tell you why that is. I don't know, but one of the things I said for a while is you need the Russell to sort of give you a sense one way or the other. Now, the
Yep.
Russell, by the way, it also topped out back in March when yields topped out, and then it went sideways for 6 or 7 months. Now we seem to be breaking out, but keep an eye on that. Keep an eye on that today, especially in the wake of what's going to be this Fed commentary. If the Russell reverses today after an all-time high on big volume, that could be a tell as well.
Yeah, and you also had your Dow theory. I know when you and Charles Dow penned that white paper,
Yeah,
100
yeah,
years
yeah,
ago,
yeah.
the transports have really like literally gone up in a straight line over the last few weeks or so. I think that's kind of interesting. They have not made a new high, but they're within a whisper of it, as you might say, Guy. What are you thinking in the crypto? Have you been following, Ethereum, ETH? has made a new all-time high over the last few days here. And it's interesting to me that Bitcoin has not yet. It did last week, and it was trading very well. But it seems that we have NFT week going on here in NYC. Is that why you came back, Guy?
Yeah, no. Well, I
Yeah.
was required to come back for NFT week, but it's part of my contract. I'm not allowed. I'm not allowed to be away for more than
Right.
2 of the NFT days. So yes.
So I do think it's interesting though in NFT week. And you know what's really different about like this vibe here in New York this week is it seems very different to a lot of the excitement in 2017, where there was this like retail craze around ICOs, and you know, like you just would see all the bros, and they were predominantly bros rolling up to these like events, you know, in New York and Miami and their Lambos and everything like that. And now it seems like this is very much about, you know, how are you like representing your status and identity online, and it's the, you know, again, NFTs. I just think that pretty interesting. And we know a lot of these are built on Ethereum, and obviously Solana also, but it's interesting that both of those are making new highs and Bitcoin has not. Guy, anything else sticking out to you? I know you've been gone for a few days. You got the VIX at 16. Like we said, rates can't get out of their own way. They're just consolidating. Crude oil down today, 3%. What do you think of that moment?
Yeah,
You
I
know?
think. Look, I mean, I think it's just taking a pause. To be honest with you, that is my sense. We'll see. There's obviously been a lot of talk around crude oil recently in terms of everybody playing politics with it. And I don't want to necessarily go down that route, but now it's become a sort of a red state versus blue state conversation, which I find to be fascinating. The other thing, quickly, that I thought is pretty interesting: some of the moves in these big cap pharma names. Obviously, Merck made an all-time, or at least close to an all-time, definitely a 52-week high, close to an all-time high. Eli Lilly back on the beam once again, and this is in the wake of Senator Sanders and some of the comments he's been making, which I found interesting. We'll see what happens with Tesla. I still think 900, the back and fill down to 900 is in the cards, although at 1180, that does not look like it's going to happen anytime soon. So those are things that are sort of sticking out to me, Dan Nathan.
Yeah, I think the Tesla thing is pretty fascinating. I mean, as far as like market cap terms, if you think about 900 to 1200 in less than, I don't know, 10 trading days, and you know that is like, you know, what is that, 250
It's
billion
amazing.
dollars in market
Amazing.
cap in such a short period of time. And you know, you read all the fancy articles. It was a gamma squeeze in this, and 99% of us don't even know what a gamma squeeze is. But you know, this is reminiscent to some other, you know, squeezes that we've seen in some names not too dissimilar. You remember one in what was it, in Volkswagen, Guy? Remember that 13
That was
years ago?
epic. I mean, that was
Yeah.
one of the first times. You know, I mean, when that happened, a lot of people in the equity world never seen something like that before. Obviously, in commodities, we used to see it all the time. So that's interesting. Now it seems to be commonplace. By the way, the other thing I think we have to talk about is I think Qualcomm is after the bell today, if I'm not mistaken.
Yeah.
Pretty interesting in terms of, you know, we've traded down to and seemingly have held this 125 level a couple times. That's sort of where we broke out from this time last year. It'll be interesting to see what Qualcomm says in the wake of some of the other big cap chip names that we've heard from. I still think they're the have and the have-nots. Clearly, Intel is on the have-nots. I think in terms of what Texas Instruments said a couple weeks ago, they might sort of be in the middle of the pile, but AMD, NVIDIA winners, and we'll see if Qualcomm can catch up in some way, shape, or form today.
I'd be surprised if it does, Guy Adami. Hey, if you guys have some questions, queue them up. We'll take them. We're going to get out of here at 1:30. I wanted to get your quick take, Guy, on the lift up 7.5%. It was come off a little bit from its highs. You know, we talked about it earlier in the week with Coco Beware, Mike Coe, on an options action hit. He was previewing it. He was seeing, it must have been on his heat seeker, one of his proprietary systems, some call buying in the 50 strike out in December, which was interesting because the stock traded above there today, on a little bit of a squeeze. If you looked at that chart, we talked about it that day. You know, it kind of held, you know, at a level where it gotten down to it like 44 a few times since, you know, January or so. So that was setting up nicely
Look,
for a short
quickly,
squeeze. But
the problem with Lyft is if you technicians out there, I think the stock traded 68 in the spring, right, in March or so. Since then, it's made a series of lower lows and lower highs. The lower low was May when it traded down to 48. Then it bounced up to 61. Then it traded down to 45 and a half, 46. traded up to 56, and now you've seen this move down to 45. So that
So you're
lower low,
saying it's in
lower
a
highs.
downtrend, is what you're
I'm
saying?
saying it's in a downtrend. What I'll tell you is, if you really want to get bullish in this thing, and it's light years away, but it needs to close above sort of $55 for it to break that trend.
Fair enough. I may take a crack at it on the long side here. I mean, obviously, it was a little
I
bit
think
of
it's
a
the right move, by the
squeeze.
way.
Yeah.
Listen. I think the right thing to do is, I think you get long the stock here, and I think, as they say in trading parlance, you buy the double on a close above 55.
Yeah, listen, the hard thing that you have right here, guy, let's see where it closed. If it fills in that entire gap, that is horrible price action. It tells you that the stock gapped up 12% or something like that, and it's done nothing but sellers all day long. If it can kind of hold and then kind of find a little footing around $50, I think you stop it at like $45 or so. That's your stop to the downside, and you see what happens here. Uber's going to report tonight, so that will be one to watch. What about, Guy? What about this F MAGA complex? So since you've been gone, Facebook changed its name, so we got to get rid of the F MAGA. It just kind of MAGA, but then Tesla's bigger than Facebook now, or Meta, whatever you want to call it here. I thought like Amazon and Apple, their reaction to their results versus Google and Microsoft last week was really interesting, but I think for the broad market, like the good news is that with the Russell kind of making new highs today, you're seeing the market kind of broaden out here a little bit, right? And so that's a good thing. And
That is a
seasonally,
good no. That is a good thing.
yeah.
I mean, listen. First of all, I mean, they can change their name to whatever they want. Facebook, it's I don't think I will ever refer to them as what you just said during Fast Money. Number one, I mean, the Facebook is Facebook to me. Symbol still FB, as they said in I believe it was the movie Coming to America. His mama named him Clay. I'm going to call him Clay, and they named him Facebook. I'm going to call him Facebook. So that's number one. The existential risk of Facebook does not go away because they changed their name, by the way, and I think you agree with that. This is a business I think they can dominate, and it's obviously a lot of people are very excited about this metaverse, and I get it, but they still have some serious issues they need to contend with.
Yeah, I mean, one of them is that they really haven't particularly innovated on anything. They bought a bunch of interesting things over the years. You'd say Instagram would be one of them. I mean, people are not using their core, web page. You probably have one of those blue websites that say Facebook on it, that sort
Sure.
of thing. But Instagram, I mean, they're worried about the youngins like going over to TikTok and Snap, obviously. So it'll be interesting to see if they can kind of
We
reinvigorate
had
some young
Greenfield
viewers.
on one of our Twitter space. He came on a Twitter Spaces with us, and he came on our podcast, and he specifically said that the most powerful social media platform out there is TikTok, and everybody is light years behind them. So if this is going to help Facebook catch up, good for them. But I think they got a lot of miles to go before they sleep, as they say.
Yeah, I mean, Guy, the biggest problem is that, to get into Facebook's metaverse, and there are going to be multiple metaverses, you got to put on these Oculus things. So we're like hardware away from it. The irony is back in 2012, 13, Google Glass was probably the best thing going relative to some of these other. Now, that was more of like an augmented reality than a virtual reality. And these are the sorts of battles that are going to play out over the next few years. So at least they say it's going to be open source for the most part, and it's not going to be a walled garden. But if you need their hardware to get in to their metaverse, it'll be interesting to see how this thing plays out. All right, Guy, what are you expecting here? We got a couple minutes. The Fed's going to come out. They're not likely to have any huge surprises here. The expectation is what? They're going to taper 15 billion a month, or is it a meeting? A month, I guess, or a meeting?
I think it's a month, is my understanding. So that gets them obviously from 120 to 105. But I mean, with that said, the balance sheet still increases. So although it's going to obviously increase at a slower pace, but they're still increasing their balance sheet. So to me, it's not about the taper. It's about if they make if there's any language whatsoever about where inflation is in terms of their expectations, and if there's any sense that they're concerned by it. That's what I'm listening for.
Yeah, I mean, I suspect that it's not going to be like one shred more hawkish than like anyone thinks it could be. It just they have no reason to do so. The headline is that the Fed begins to taper their quantitative easing, and if markets are going to do their thing, what they do, they're going to immediately like either rally really quickly and then sell off really quickly, or vice versa, and then they find a thing and then they grind into the close a little bit, and then maybe next tomorrow they just kind of reverse that move right altogether. I guess I'm more interested in seeing how the bond market reacts than the stock market, because with the VIX at 16, the S&P, the Nasdaq, and the Russell 2000 all at all-time highs, they're basically telling you they're not particularly concerned about the things that we know, right? The bond market is the one that's acting very curious to me, and I'm very interested to see how that reacts when we get the news that we expect.
Agreed. I mean, and I think, by the way, I think you're 100% right. We've seen 5-6 basis points moves over a 3 or 4 minute period of time, a few times over the last 5 or 6 months. I think you're about to see one again. I think I know which way it's going, but it's going to be interesting to see what happens in
You think
about
it's going higher. And to me, the most fascinating thing will be if yields sell off when we get
I
that
agree with that.
headline. And I'm also really interested to see how crypto acts, because you would think that a tightening of financial conditions might be the sort of thing that would cause the Bitcoin to sell off, but who knows? So we'll look for yields. We'll look for crypto stocks. Not expecting like a dramatic move unless they surprise and they're a bit more hawkish, or to your point, the commentary around inflation, they change that kind of transitory tune in a big way. I just don't think they're going to do that. So, all right, listen, Guy, it's great to have you back. We really hope that you enjoyed your vacation out there in Utah. Amanda was amazing. We did a lot of fun stuff together. Please, everyone, check out tomorrow, Guy and I at 11 o'clock. We do a market call, MKT call. You can follow it at MKT call. It's at 11 live, and the link will be on that Twitter. We're going to have Liz Young from SoFi. She is the strategist over there. They're going to be a sponsor of the MKT call with us. And each Thursday, she's going to come on and detail her weekly macro note, which will be great. So we're going to have a nice, heady macro conversation with Liz. Then Carter Braxton Worth of Worth Charting is going to join us, and we're going to break down some single stock research calls. That is sponsored by FactSet, and we love FactSet, and all of it is powered by Open Exchange. So tune in tomorrow, 11 o'clock. Set your reminders for that. Want to thank CME Group. They sponsor these trading spaces. They're also the sponsor of our podcast, On the Tape. We have a great episode. It's WTF is the Metaverse. That's dropping Friday morning, but Danny Moses will be back with Guy and me also, and we're going to talk about everything Fed, markets, rates, inflation, all that sort of stuff. So thanks for joining us in Trading Spaces. We'll be back doing this Monday at 1 o'clock. You can also catch it in the podcast store in our On the Tape feed. So go there, subscribe to On the Tape in your podcast stores, rate, review it, share it, all that sort of stuff. Guy Adami, thanks a lot, man. That was fun.
Later.
Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter @_Trading Spaces and join our Twitter Spaces every Monday and Wednesday live at 1 p.m. Eastern. You can also follow On the Tape in your favorite podcast store for new episodes every week.